Yo, what's good guys? It's DCRYPT back with another video, and this is the first time you see me out in Chicago, so welcome. I get a lot of questions about option trading and how to get started. A lot of people are clueless and have no idea where to start, where to begin. So if that sounds like you, you're in the right spot. But the first thing you want to do is sign up for a WEBULL account. With a WEBULL account, you can day trade with less than $25,000 in your account with a cash account. If you are using a margin account, you only get 3 day trades per week, so you don't want to do that. If you use a cash account, you can day trade as many times as you want. Unlike a margin account, a cash account only lets you use the money you have in your account. So if you have a $5,000 account, you can only day trade with up to $5,000 per day. So if you don't have a WEBULL account, use the referral link in the bio and use the steps provided below to help you sign up for options level 2. Step number 2, so if you want to start option trading, you can't just jump in blindly. You're gonna have to know how to read charts, and this is what we call technical analysis. So in order to read charts, I use tradingview.com. You can also download it on your phone on iOS or Android, and or just look it up online and use it there. TradingView is what a lot of traders use. A lot of people use Thinkorswim charts, WEBULL charts. It's all just personal preference, but the easiest one to use and also free is TradingView. They do have monthly options, but you really don't need all that. And I know a lot of people struggle with the charts, so if you need help learning how to read the charts, join the Discord in the bio. Have all the education you need there for free. Now to finish off the video, I'm gonna give you a little bit of game on a trade that I took recently using supply and demand and how I use it to enter and also exit a trade, and what would have happened if I got stopped out for a loss and what I did to maintain my profits. So here we go. So here we have SPY on September 14th, the day before the day I took the trade, which was September 15th. So what do I see here? First thing that I notice is I see heavy selling there, heavy selling up here, and then also bounce levels here around 391. The first thing I want to mark is my supply level, which is here. This is how I'll mark my supply level. My supply level is here. So the first red candle to the start of a dump, that's where I would mark my supply zone. So I'll go from the top of the wick to the candle close, and I'm going off of this candle here. And so I'm gonna drag that out all the way to the end of day of Thursday. I'm gonna go ahead and let this play out. I'm gonna show you how the market opened up and how we reacted to this level, which is supply. We ended up getting above it and rejecting it, coming back down, which is signifying that there are still sellers in this area. So this supply zone is still valid. Had we gotten above, I would have waited for it to get above and anticipated a bounce off this same level and entered there. But instead, I entered my trade here with my stop loss above the zone, expecting it to come down to yesterday's low of day. And so if I let this play out, we'll be able to watch and see what price ended up doing. And this here is where I ended up taking my profits on this trade. Just anticipating a rejection off the supply zone. Once I saw that price wanted to reject, I entered my trade and let it play out. And then me and the group ended up making profits. So that was a quick example of using supply off of supply and demand, where I entered my trade, where I was anticipating a rejection or a bounce, whatever you may call it, for a quick little 10-15%, and then done for the day. But yeah, I really hope you guys found this video useful. If you enjoyed it, please drop a like, subscribe if you're from DCRYPT. We out, baby.